Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. It is March 25th, 2025. My name is Aaron Edwards. Welcome to this week's market report and recommendations. Let's jump right into it. We always want to start with the recommendations, and then we'll go into the thought process behind it, the analysis. So let me get that screen shared here so we can jump through the recommendations. Last week of March, last week of quarter one, last week before the USDA report on planting intentions, and April will be here before you know it. Next week's April, and then spring, and who knows what the spring season holds. So we're basically on the recommendations. Most of the recommendations are just the calendar telling us we gotta get caught up with our quarter one position. So let's go for it. Sell an additional 20% of quarter one corn bushels. This will finish our quarter one corn sales. We are going to re-own that 20% of quarter one corn bushels and use the July contract. So that's the second item. If you're familiar with basis contracts and you don't want to do this in a hedge account or on your own, this is essentially, you can just write a basis contract for July if you prefer, right? So the idea is we made some hedges, took some profits on our quarter one. We have to move the physical inventory. Let's move that because it's the end of quarter one and these are our quarter one bushels. So let's move that. But we want to keep upside potential, at least on the board of trade, even if we're giving up upside potential on basis, but we want to keep upside potential in case we get a spring rally. So the recommendation is sell the corn, get a long position for July. You can accomplish that with a basis contract as well, where you lock in the basis, but you say, I want to lock in the futures price at some future date. I recommend using the July contract. Similar on the soybeans, but with the corn, we kind of layered in and layered out, the positions, and then have been averaging positions out. I was hoping we would get something friendlier from the beans, and so we have to play a little catch up here. So we're going to sell 50% of our quarter one soybean bushels this week, and we are going to re-own that same 50% of quarter one soybean bushels. Our first 50% was sold at a little better price. You can also do a basis contract with that if you prefer. So let me know if you have any questions on that. But the idea in a nutshell is that we want to keep our upside potential open on the board of trade, at least through, the July contract, which basically takes us deep into June.
And with that, let's jump over to the this week's recommendations, and let me get that screen shared here. Okay. You might notice where I'm not showing Brazil fieldwork progress, soybean planting, soybean harvest, and double crop corn planting. Double crop corn planting is 90% done. Soybeans are on the home stretch. They'll still, for several weeks, still there will be beans coming in, but the lion's share of most of the beans have already been harvested, and what we have now is the rest of harvest happening. But we really get that selling pressure. A lot of farmers in Brazil have commitments from April 30th is like their deadline on a bunch of financing and funding programs. So April is a big selling month where farmers are like, I kind of need the cash. Think of it as probably like the end of November, end of December here in the US, where it's like, do I figure out a way to hold on to my grain, or do I just let it go to meet my commitments? We are going to focus on weather, and weather now is not really impacting harvest. It could impact soybean harvest, but weather now is primarily a corn story. And the first thing I wanted to show you is just the past precipitation, the dryness, right? So it's relatively dry, or has been relatively dry over the last 30 days. This has hurt farmers. I've talked to multiple farmers in multiple states in Brazil, as well as in Paraguay. There's the big operator down there that's a customer of ours in Paraguay. He said, I didn't even plant double crop corn. He said, we were losing yield to soybeans for dryness, and I didn't even plant double crop corn. So I don't think the acreage is a huge story. I think actually, if you look at Brazil, the acreage is probably going to go the other direction. And, we might actually see a bump in the acreage. But it has been dry, and several farmers down there have said they are already expecting yield loss. That being said, if you look at the 7-day past precipitation, right, they did get, and this information is from World Ag Weather. They have great information. They did get rain, and I talked to a couple of farmers yesterday, and they said they were absolutely lifesaver rains. Maybe they're going to lose yield, maybe not. Other farmers say for sure they've lost yield. It's kind of one of those stories from my vantage point, because I talked to multiple farmers, and I'm not trying to downplay the weather factor, but it's one of those stories where it's like, oh, there's yield loss for sure. And I'm like, how about on your farm? It's like, well, I'm okay, but you should see my neighbor's farm. He's really struggling. There is a weather story. Probably Brazil has already trimmed off at least upside potential on their double crop corn yield, but maybe even like there may already be some losses locked in. Most of that corn got hit. The corn got hit in a vegetative state, which if you get rain, it could bounce back. But there's definitely a story down there. It's something we're watching. The main thing to remember is we do have a weather scare story, or we are in a season that we can get a weather scare out of Brazil. And right around the corner, April, May, we're going to start very likely having weather concerns here in the US, which is the monster corn crop. I just wanted to make sure that's on our radar. Then we always want to start with the pyramid, or not really start, we've already talked about, but before we jump into the analysis, we just want that refresher. The base of everything we do is combining the needs of your farm with market opportunities. That's the importance of building that portfolio. That's why we work together. That's why we make a plan for your operation. Then built on that, we tweak that portfolio week in and week out with seasonality, the position of the funds, technical analysis, and that's what gives us our action. So we start with the action when it comes to the video, because you guys are busy and we want to make marketing a light load for you. But the thought process behind what we do is done in this fashion, because this is what we have found to bring the best results year in and year out. And that's really what makes the difference on marketing, is customizing recommendations to your operation. Okay, let me go ahead and share the screen here. We are going to start with soybeans, and we're going to go to corn, and we have a question to wrap it all up. This is the net position of the funds in the soybean market over the last 12 months, and we go over this weekly, so there's not huge takeaways this week, but I do think it's interesting to just point out that last year, speculators, I got this in blue, last year speculators were sure they wanted to be sold. In January, they're like, maybe we should be long. Now here we are sitting on the eve of planting, right? Springtime is upon us. And speculators, if you look from the end of February through March, they're as close to neutral as you can be. So they're technically sold. They technically sold a little bit more. But with the volumes that speculators, come in and out of markets, it's as close to just neutral as can be. So the question is, bearish, bullish on the beans. The question is, what do speculators do after the USDA report? They're coming into the report as pretty much neutral, right? Maybe a little bit sold, but they're not really playing their hand ahead of the report. What happens next Tuesday, a week from now, after the report, after, April has set in, what quarter one is over, when they're already looking at, okay, this is April, May, June, how do we want to be positioned for U.S. planting season? We're, 5 trading sessions away from that. How will they be positioned? We don't know. There's no crystal ball. When there are factors in the market where there's a probability one way or the other, I'll say that. Guessing USDA reports, take a coin out of your pocket, throw it up. There's no way to know what the report will say or how markets will trade around it. That being said, we still have decisions to make. So let's just kind of look at pros and cons. Okay, if speculators, what are the bearish factors and what are the bullish factors? Bearish factors. There are still a lot of soybeans to sell in Brazil, and there will be selling pressure throughout April in Brazil. Another bearish factor is just the global ending stocks inventory of soybeans is high. That's another bearish factor. We've known that for months, those two factors. So what's the next headline? Maybe a little less acres in the U.S. That could be friendly for beans. Maybe delayed planting in April. That could be friendly for beans. Soybean basis in Brazil is exceptionally strong, almost to the point where it doesn't make sense for this time of year. But what I would say is very interesting about that, we saw really strong exports out of the U.S. quarter 4 of last year, surprisingly strong exports. And now we're seeing surprisingly strong demand for soybeans in Brazil. Personally, I'm wondering if this isn't more behavior that's like stockpiling beans than just your regular middle-of-the-run demand. I think that we might have kind of a surprising, oh my goodness, there's more demand for beans than I expected. That could be bullish. Speculators coming into the spring, you're not usually well served being short. Just for the most part, if you want to be speculating the market, your chances of success between, say, March and June, you're usually better being long. I think speculators will either stay neutral or start piling onto the long side of this market in the next couple weeks. That's my guess if I had to guess. Not really much of a story in basis. I'm showing here the basis. The default that I use, because basis is location specific, I use Tippecanoe County, Indiana, which is home of Purdue Boilermakers, and Purdue has this great basis tool. So that's my default. It's also my alma mater. But if you look in Illinois and Iowa, even Ohio, a lot of states, soybean basis is way under where it should be. But it's the calendar is saying we got to get rid of it. Okay, let's lock it in. There's not that bean demand that we would like to see. Seasonality would tell us there's probably friendlier demand ahead of us. Not overly optimistic on beans, but I do think we need to keep our, minds open, so to speak. And then this is the futures. I wanted to draw on this a tiny bit. Okay, so if we look at the position, let's just draw a box here. Let me draw this box maybe in green. Let's pick a line here at about 1010, and then go back here to say October, and then let's go up to 1040. It's right there. And close in this box. I just want to point out that's within that 30-cent range. We have spent a lot of time in this range between 1010 and 1040. Sure, we've had some rallies. I'll get these rallies in blue. We've had some rallies up here, right? And we've had some dips down here, but we have spent a lot of time between 1010 and 1040. If you just think of trading sessions, how many times have you had a chance at those prices? So the question is, I'm going to clear this up a little bit, get that in blue. Question is, will this 20-day moving average that's coming down, is this going to hold? And are beans just going to get destroyed and come maybe back down here to these December lows? And off of tomorrow's report, or next week's end of March report, that is possible. We could get a retesting of those lows. That could happen. Bigger picture, seasonally, what we would probably see is at some point in time, we get up over here over the 20-day. Let me get that in green. Some point in time, we get over the 20-day. And then back in blue, then this 20-day will curve up, and that'll take us into an uptrend, and then we'll have to test the 200-day, which is coming down here. And if we break through that 200-day, that's when we got the rally on corn. I have still not ruled out the possibility that we're going to get a spring rally on soybeans. We haven't sold, I haven't recommended any new crop sales on beans, and that's because I'm still hoping for that spring rally. So let's shift gears. Let's talk about corn. Pull that up here. The corn is interesting. The speculators, they backed out of their corn. I believe this is the 5th week in a row that they have reduced their long position on corn. So let's see. That was 1, 2, 3, 4. So I guess, 5 weeks ago was the high. And if you want to just kind of think about big picture, they were sold. And then in November, they inverted their position. And then they got real long. And then for the last month, they've been dropping off of that. Again, we kind of see corn moving towards, they're not going to probably get there. It depends today's Tuesday. I doubt they were going to get all the way to neutral like they did on beans, but both corn and beans are kind of coming into this end of March report as close to neutral as they've been. They're kind of trying to just get somewhat neutral on this report, not really play their hand ahead of it. There is just, generally speaking, a little friendlier story on corn. We'll start with old crop corn. Technically speaking, soybeans are in a downtrend, but corn is ping-ponging here. It's in a downtrend because it's below the 20-day moving average, but it's really found support, a pretty solid support here, and it fell under here, and then it came up, couldn't quite make it, didn't make it all the way down. It's just kind of ping-ponging. I think we're going to just kind of see it between the 20-day and the 200-day until that USDA report comes out, and then one of two things will happen. It'll either break down or it'll break up, and then you got to look at other factors besides technical analysis. Springtime's around the corner. Do you really want to be betting against the corn market if there's a weather scare in the spring? My hunch is we'll probably see We'll probably see some speculators, layering back into long positions on the corn and beans. So again, I'm expecting a spring rally. We usually get a spring rally, counting on a spring rally, so to speak, to get some work done. New crop is similar. We've made some sales on the new crop. New crop is not really getting a rally, but a little silver lining or a little optimism is it really has not, getting that in blue because it'll look a little better. It's really not, the new crop corn has really not been that comfortable under the 20-day moving average. Whenever we fall down there, it spends, except for here, I mean, it just, one or two sessions and then it kind of jumps back up. It doesn't seem like they're really ready to sell that new crop corn, just betting against it, at least not yet. Like I said, USDA reports, we got to pull a coin out of our pocket and see what happens, but I'm not sure I would bet against the corn market just yet either. And similar story there on the corn basis. If you look, it's a mixed bag. This is, again, right around Purdue. It's the Purdue basis tool, and there's not much of a story on basis, but I always like to show this from time to time because I do think it's important to remember, when do we actually get basis opportunities? And we actually get basis opportunities usually in the summer. So, nothing's happening in basis, nothing will happen. Well, the normal thing is for really not very much to happen in basis. Usually get a little uptick after harvest, and then if you go from like December through the winter into the spring, like the winter, it usually nothing really does happen to basis. Historically, it's not that significant of a time. And then in the summer, you might get some opportunities. And a lot of times that opportunity comes because basis is strong, but futures are, going the opposite direction. So cash markets are still strong. Futures have tanked. So just want to show that from time to time. Now let's close out of this and summarize where we're at on. We've gone over the recommendations. Now let's just get the summary. So seasonally, we start getting weather scare for corn in March out of South America, and then plantings not too far. Get a little planting in southern USA. So this is seasonally a sell for corn. Managed money, even though they're long, they're just neutral. They're not long enough to justify anything. And we are in a downtrend on corn, but it's important to observe that we're in a downtrend in relation to the 20-day moving average, but we're actually above the 200. But that is a downtrend. We use the 20-day mover. And the soybeans are in a buy. It's March. It's harvest in Brazil. That's a buy. Managed money, they're technically sold, but pragmatically it's neutral. And in a downtrend on soybeans as well. Basis. Basis levels are at or below historic levels for corn and soybeans in most of the U.S. Corn Belt. Basis opportunities tend to improve in the spring and especially the summer. Soybean and corn cash markets in South America are very strong, surprisingly strong for the season, which makes me think that demand for grain is healthy globally. The corn market in Chicago seems to be stuck between the support of the 200-day moving average and the resistance of the 20-day moving average. Personally, I expect sideways trade until we get more information from the end of March report. The soybean market in Chicago is in a downtrend and showing signs of weakness. But over the last 6 months, price levels too much below our current price level have been buying opportunities. The market needs to decide if it wants to bet against soybeans even as the U.S. growing season is about to begin. If it wasn't clear from the video, my vantage, it's very hard to get me to wager against seasonality. I think seasonality is one of the stronger trends in the market, and we have, not today, not necessarily next week, but before too long, it's going to be time to be getting a crop in the U.S. And we typically get, anytime there's planting, anytime there's a growing season, whether it's in the northern hemisphere or the southern hemisphere, we typically get some hiccups. And so this might be the year that gets away. This might be a year where we stay sideways and low for a long time. But most years, seasonality is our friend, it's our ally. And at this point in time, we can still be optimistic that most of seasonality is ahead of us here in the U.S. We do have a question, and the question is, okay, I am behind the recommended new crop sales on corn. Should I get caught up ahead of the report? So we've recommended making new crop corn sales. Prices were higher. We recommended new crop sales. Prices dropped. We have a USDA report coming out. Should I play catch up because I haven't sold any corn, or should I just say, wait and sell later? That's always a tricky question because, okay, I missed a recommendation or I'm behind. What do I do now? Coulda, shoulda, woulda. We don't want to live in the past. We don't want to live with the regret, or we live in the world the way it is. We need to make decisions now. If we aren't selling new crop corn today, then I would say just kick that can down the road, wait for a spring rally. Now, a missed opportunity in the winter makes us that much more dependent on a spring rally for success. So that's why we want to space out sales. That's why we want to layer into positions. That's why we try to not do stuff all at once. Yeah, we might miss the high tick. We might be, coming in and out of positions and managing it that way. But that also allows us over the course of time to not be as dependent on that next rally, or to not be rooting for markets to go our way as much. So I would say you don't need to get the work done before the USDA report. That's not to say I know that we're going to go higher. It's just to say we're 20% sold on new crop corn. That means we're making 80% on a spring rally, which has not come. In your operation, you're just going to be at 100% banking on that new crop that hasn't come. So it's a little bit more intense than we would like to be, but that's okay. We haven't sold any new crop beans. We haven't really gotten a rally that said, hey, let's make sure we lock in some new crop beans. So we're going to wait on that a bit. So I'd say hold off. You don't need to get your work done this week. Let the report come and go. Hopefully it's a friendly report and we're higher. Even if we fall, my hunch is speculators will say, I want to be long for the spring. These are low prices. And I think even if we fall, I kind of expect a recovery on the other side of that. And maybe maybe we kind of get our wind knocked out of us and feel deflated for a week or two. But even if it goes down, I still expect a spring recovery of some sort. And so I'd say hold off on it. Just make sure, we're on our toes and ready to make sales when we need to make sales. Make sure we're timely moving forward, because we want to make sure that the windows of opportunity are respected when they come. And that's it for this week. Hope you all have a good rest of your week. Wrap up your Q1 work and be as relaxed as you can be before the USDA report, and then spring planting's right around the corner. Also, feel free to email me any pictures of your preparation work or any field work. I love seeing you guys' operation. And also, if you don't mind, farmers in Brazil love knowing what's going on with the crop here. So at any time you want to send any pictures or one-liner of what's going on, just let us know here, and if it's all right with you, we'll relay it to our customers overseas, just like sometimes they share pictures here with us. Great rest of the week for you.